This morning, Trump comes out, he rings the bell, and he doesn't really comment on the stock market. He says, I'm not going to make any stock market predictions in case there's a dip, talking about prior to his election or inauguration. And so, really interesting viewpoint there from, the soon-to-be president once again, right? We see Nasdaq again has pushed into all-time highs here from Wednesday, and then today kind of pushing back up. It's kind of stalling out here. This is like the 15-minute. You go to the 2-hour, you're still sitting at all-time high territory, specifically on the Nasdaq. You go into SPY if that's your type of thing. And again, you still look decent. You're back above 604. You're holding there. You're still above 600. And this is kind of what I was saying before. Like in the last video I talked about, it's hard to be bearish when you look at higher time frames like this and you're going straight up. But what I will say is there's one area of the market that looks pretty terrible or pullback worthy, right? And it's the Dow. The Dow has continued to pull back. I think you've had a handful of short opportunities. I was kind of yelling this today as well in Discord. But again, like you kind of came back into this level here. We've mentioned a handful of times, clean SR flip, 44,270, mentioned in the last video, and you push straight down through 44,000. We'll see how we hold up if you can hold up, but even here looking at like the 4-hour chart, yeah, you're breaking down a little bit, but you go to the daily and the Dow is still in a really good position, 45K. You talked to me a few months ago and we were just talking about like 42K or 40K, and it's just crazy where we're at. And so it's hard to jump to a conclusion of saying, oh, we look terrible, this is so bearish. But in reality, it's probably just a little bit of a pullback here on the Dow. So there's no real reason to be concerned. But the craziest thing here is you look at the Nasdaq, and one of the biggest things we talked about was the Nasdaq struggling to move without semiconductors. And you look at semis, and I don't think you look great, like all in all. I still believe semis as a whole in the market are probably the biggest opportunity going into 2025. I'll stand on that hill. But you're just grinding at the 200 SMA on the daily. And as long as you hold this, you look really good. A good example of this as well is a stock like Google most recently, grinding on the 200 daily moving average and then skyrocketing back into all-time highs, right? So SMH, it's an ETF too, going over all, semis. You're getting kind of trash movement here, but Nasdaq is still ripping. And the biggest factor here is your Mag 7. This is kind of like what we talk a lot about. This kind of the makeshift Mag 6, Mag 7, our top largest holdings in the market, right? Or that we care the most about. Apple, Amazon, Tesla, Google, Nvidia, Microsoft. You don't have Netflix in there. I could throw Netflix in here and you'd be even higher. But this is where you're at right now. And it's interesting to see that you're doing this without your top dog, which has been Nvidia over the past year, okay? So when we look at this action, you're breaking out here like crazy based on Tesla, Amazon, Apple, Microsoft, and Google all pushing back into their respective highs. Microsoft is not at all-time highs, but it's working its way there right now. But this is important, and this is what I keep saying. It's hard to get bearish when you see these stocks performing the way they are. That's why in the last video I talked about, I was like, dude, even though semis don't look good, I look at Apple, I look at Microsoft, I look at Google, I look at Tesla. I'm like, how can I get bearish in the market when your largest companies are performing the way that they are? It's just very, very hard. And if you want to get bearish, you can, but you got to go short on the weak names, and even in semis, you have to find the weakest semi, which is like AMD. So someone out there is like, hey, I think Nvidia looks terrible. It looks like a rug pull, this or that. Like, does it really, let's be honest, does it actually, you're consolidating at previous all-time highs? That's pretty great behavior from an equity that you're trying to buy. And then today in the after hours, we're going to have AVGO earnings, which, again, looking at AVGO, this is a crazy setup. I don't want to jump and say that you're going to break out, but I will say if earnings go well, I don't see how AVGO doesn't start its run into $200. I'm recording this before earnings, so we'll see. But if it goes bad, I can see semis getting hit very hard. So again, it's like I'm sitting on the sidelines. I'm watching closely what is going to happen. But again, as I look at this, I'm like, dude, you don't look bad as a whole. This is kind of what you want to take place. And you're getting this movement without semis. And if semis, it's the same conversation. If Nasdaq starts moving up with semis, we've seen what happens. This is the action on Nasdaq when Nvidia was moving up aggressively. So it's very important. Like we go back all throughout the past year, which sometimes we forget about, but that's how the market has been moving. So as I'm watching here, I'll have some of these levels posted on Twitter. Make sure you're following for that content. I'll try to post some levels, have you guys up to date as well. I've gone a lot over Tesla, these other equities, but it'll all be there as well, going over SPY, Qs, etc. Also, too, special shout out, the second YouTube channel, Tyler Wilson, like OD or something, right? The link is somewhere down below as well. We just reached 5,000 subs there. It's me just going over education, futures, everything in between. I appreciate you guys as well. Couldn't do this without you. That's really my really big focus as of recently. I'm kind of the inspiration for getting more personal on these videos as well. Because I kind of want to share more into what I'm looking at with the market and kind of the psychology behind it. And I think sometimes there isn't a lack of maybe personability here. And then we go into Bitcoin and you look at the action here, like you've really just mounted above like 95K. We saw the breakout into 100K and now you're just sitting up here. So we go more into those equities or like Coinbase and MicroStrategy. And I think going into this year, they still look really solid. Like Coinbase is just positioning itself above $300. And we already know going into their next set of earnings that they're going to do well. Like we know that I'll go more into that during when we close to that earnings. I don't want to do a whole video on that, but I could. MicroStrategy, more the sketchier name here, but you're making higher lows like still also impressive. Like you're making these higher lows continuing up here as well. This is what you really wanted to see as the market progresses. And again, you still look solid. You still look good. So again, like I'm actively right now, even though I'm bullish, I'm actively trying to find areas of where the weakness might lie in the market. And I struggle. I struggle to find that weakness. Now, the Dow is the area that looks the most concerning. When we look at XLF and you're getting a pullback, don't get me wrong, you are. But again, you have to zoom out. Like you have to look at where, I mean, like now if we get below 48.7, like there's no liquidity and then we have a few more drops. But I mean, look at what XLF is doing. You broke out of this like 2 to 3 year long resistance line at $41 here on XLF, the banking ETF, and you're going crazy. You're running like crazy. XLI Industrials, running like, I mean, previous all-time highs, right about here, 111. You've run at highs 30%. Crazy. You're getting a pullback, but like, again, where are you pulling back at? So very important to understand that. Now, the one sector that looks really bad is healthcare XLV. And again, even there, a little bit concerning, because you're coming to get too bearish on it, because you're coming back into these like previous highs here, potentially the giant range where you kind of sat between 2021 and 2023, right? And this was another area that I kind of focused on and honed in on today as well in Discord, and I mentioned early on as well. So again, I just want to highlight and again, just go through thought processes. What's happening here? Why am I looking this way? Why do I look for weakness here? And today, the focus on weakness was AMD, obviously mentioned that, but then also in Dow, UNH, Johnson & Johnson. Mentioned Eli Lilly in Discord as well. But again, UNH, propping down, coming into 508 like we talked about, rejecting there, right? Go look at the action. You're breaking down into 516. J&J, breaking down, slowly but surely breaking down into 145. Eli Lilly, breaking down between 795, back down to 780, possibly filling the gap back down to 760, 755. Again, why am I focused on this? Because this is where the weakness lies in the market. How do we know that's where the weakness is? Again, you go look at Dow. It's the weakest index, number one. We look within Dow. What's the weakest sector of the Dow? XLF banks have performed the best. They're weak, but they're still performing the best. Industrials, performing very good. And then you get a look at energy. It's okay, holding up. And then healthcare, obviously the weakest sector out there. So again, that's like the step-by-step process of what we're really looking for there and how you're able to kind of attack this market, or how at least I'm able to attack this market and things that I'm looking for actively. So it's not like I just walk up to the game and I'm just like, okay, this is what we're playing today, bada bing, bada boom. It's slowly but surely finding those steps and knowing where to get aggressive. Okay, so again, obviously video today a little bit differently, or just different, but I'm trying to attack things more different here as well. I want to be able to break down why I'm thinking the way I'm thinking, where maybe I go wrong in the videos, how I can obviously improve. You know, iron sharpens iron. I strongly believe in that here. But that's what I want to build here on the channel going forward. I don't want it to just be you come here for some information, you leave, bada bing, bada boom. I want it to be a place where we bounce ideas off of. We're actively thinking of how to get better in the market, how to improve ourselves, how to find the best opportunities, right? And so I do encourage you guys, right? Again, I don't think, and I never want people to feel like they have to pay for content. You don't have to pay for Discord. Guys, I'm telling you right now, between me, Jordan on Twitter, we are going, like, I've taken a little bit of a break from Twitter the past few days, just like to position myself in knowing what I want to do with the YouTube channel moving forward. There will be less videos here. I'm sorry, there just will be. But I want to put more thought, more engagement into these videos as well for you guys, and to make sure that I'm giving you my best as well in the content of what I'm looking for every single day here as well. So again, if you're interested, I recommend following on Twitter. It's absolutely free for you guys. I've also seen a lot of feedback from you guys for my funded futures and what's happening there. If you're interested, again, the link is in my bio, everything like that. Again, I think futures are a really good place for a lot of you guys to start. If you're having low equity or low capital to get into trading, I think this is one of the best places to get started. You can have 3 accounts starting off rip. Again, use code HEFE for the discount code. But again, it's pretty affordable, $80 for an account. Again, that is a great way to get started. I have a lot of videos coming on the second channel as well, explaining how I'm trading there, what I'm doing, everything in between. So if you're interested, make sure you tap it. But again, going into 2025, I want to make better content than I have made and keep it, myself at a certain level or a certain standard of that content as well. Follow for more content. I'll see you next time.